Good morning, everybody. Welcome to the Flow Show. A bit quieter today, Tuesday, the 13th of May, and everyone's wondering what to do now after you've had all the moves yesterday. That's something we'll look at in a little while. Morning, Kay. How's it going, mate?
Morning, mate. Morning, everybody. Yep, all good, all good. Indeed, we seem to be in a bit of a what's next moment right here. Although risk continues to do relatively okay, all in all, right?
Yeah, it's not reversing, so
Oh,
that's a positive step. But early days. Who thought we would get what we got yesterday? So you never know what might happen. Right, let's get cracking. And we'll kick off as I have done most mornings, just making you aware of our 40% off offer for joining our chat room and platform. Still more people coming in the doors, which is very nice to see. Conversations getting bigger and bigger in our chat room, like busier and busier, which is always good. And helps keep things ticking along and helps you get through the trading day knowing that you're not alone. So take advantage of that. 40% off for your subscription. No contracts, no lock-ins. We don't tie you down and now you're down with anything. You can cancel when you want. But if you do take a price, you get to keep that price for as long as you subscribe. So if prices go up, you don't get hit with that. And who knows, if prices ever go down, then you get to take advantage of that price as well. So we never punish our loyal customers by giving new customer offers cheaper than what our regulars pay. So anyway, enough of the sales pitch for that one. Let's go on. Bank of Japan. We had their April meeting summary out. Not a lot in there that we didn't already know. A couple of lines that I picked out. The BOJ will enter a temporary pause in rate hikes, but shouldn't slide into excessive pessimism. We must guide policy nimbly and flexibly. Someone else said our projections have been severely jolted by the US trade policy, with higher US tariffs likely to weigh on Japan's economy and prices. But someone had a positive line saying the chances of Japan's underlying inflation faltering is small. So while they do see all this uncertainty on the horizon, some don't think it's going to change what's happening in underlying inflation, or if it does, it won't be a big effect. We had Deputy Governor Uchida speaking as well, but he just talked all around the houses without saying anything new or worthwhile. One other piece of news from Japan, Finance Minister Kato said he will look to take another chance to talk with Besant on FX at the G7. So one may wonder what that might be all about, Kay, seeing as he came through the last meeting and the G7 FX statement pretty much unchanged and everyone happy.
yeah, and Ishiba, the prime minister, wasn't really happy about things with the US right now. Cato and the MOF repeated that they are not manipulating the yen. So I don't know. Does he just want to put things straight with Besant, or are they finally going to give in to something? But I don't see what they could do. I mean, yes, we have had an 8 big figure rise from the lows in dollar yen, but all the dollars have been coming back. Um, I don't see what they can really come up with. It's not like people are like trying to make a comparison with the auto deal, the car deal that they struck, which is now 30 years ago. Back in end of 1994 or 1995 it was. And all of us, and if for as long as they don't reach a deal, the US and others were suspected to have strengthened the yen all by themselves. But so some people are trying to compare it with that episode, but I strongly disagree with that. I mean, we are in a completely different ballgame now. I don't think that Japan is barring excessive weakening of the yen, if it would be seen. They've already intervened. But I don't think that they will make like some kind of a Louvre Plaza or whatever record to specifically for the Japanese yen to let the yen strengthen. And how would they do it? That's one thing. If they don't do it through interventions, it should be done probably via rate hikes in the Bank of Japan. And now we have seen that they are on a pause as well. So I'm really skeptical that they can do much, but at the same time, extremely curious what they possibly can come up with.
Yeah, exactly. It's almost like he got what he wanted at the first meeting, so why go and poke the beehive again? But anyway, that's Japan for you. I'm just looking at the Aussie dollar chart quickly because Xi has been out, according to Xinhua News, saying he's willing to work with Australia to boost partnerships. He was also congratulating the Aussie PM on the re-election, but obviously not moving at all on that headline. Anyway, so moving on from that. We had a bit of data out. I've not even got my calendar ready yet. Look at that. Lazy, lazy, lazy. Whoa, where am I? What's it? 13, 12. Boom, boom, boom. There we go. So, yeah, some data out this morning. Overnight, we had the UK BRC retail sales monitor. Only one I keep half an eye on, year-on-year numbers, showing a bit of a jump for April, likely reflecting the Easter period, but could mean that we get some decent sales for that period when we get the next retail sales report. Then we got UK jobs data out as well, which was nothing to write home about, really. There's been a little bit of easing in wages, not massively. Earnings ex bonuses for March coming in at 5.6, down from the 5.9 previously, including bonuses a bit higher than expected, 5.5 versus 5.7 previously. So the turn of the financial year can be a time when bonuses come into the mix for that. Overall, unemployment rate went up a pip as expected to 4.5%, so keeping things on the softish side there. A bit softer on the employment change. As you can see there, 112k. Vacancies, they were down for Q1 to minus 42,000. So it's the sort of UK version of JOLT, so job openings and vacancies and that lot coming down as well. So firms not looking too hot in increasing labour. So we know the labour market is going through a bit of a sticky patch at the moment. Not yet falling off a cliff, but it's not looking too hot either. We've got the Germans zoo out as well. Economic sentiment, current conditions coming in worse at minus 82, which was worse than last month and far worse than what was expected. Expectations had a bigger jump. We had a bit of a move. It went from minus 51.6 after that investment news to minus 14. So it went from plus 51.6 to minus 14. Was expected to jump to 10.7 when it came in at 25.2. So a bit of optimism there, even if things stink at the moment. BOE's Green, talking yesterday, he said wage and inflation measures are moving in the right direction, but still too high. So that comment applicable to that data today. It says disinflation process is underway. Some slack has opened up in the labour market. Households may be more sensitive to inflation. It says FX rates could be disinflationary if the trend persists. So she came into this rate decision quite torn about whether to cut. So she wouldn't change her decision after this morning's US trade news. BOE's Taylor, he was one who voted for a 50 cut alongside Dingras. His confidence has eroded. Gas and oil prices have fallen. He says wage settlement data coming in line with expectations for slower wage growth. Didn't really, not I read anyway, or saw, didn't really go into why he voted for a 50, but he's not looking the most hawkish of the lot. Anyway, the ECB bods have been out and about. ECB's Nagel says we must be cautious on monetary policy decisions. ECB's Escriva. We must be humble in assessing the current situation. So both of those hinting that they may want to take a slower approach to more rate cuts. Kestrel Kazakhs, who's usually quite a bit of a hawk, says gradual rate cuts seen if CPI converges at 2%. Sees reasons for another rate cut, but we must be cautious. Kate, anything you took from any of the UK data or anyone else?
Well, yeah, the very positive retail sales. We know it's maybe like a bit of weather effects and things like that. Easter falling in April, but it was a good little report there. Huh? How much was it? 6 point something?
6.8, yeah.
6.8. It's good. Yeah, we were talking about that in the chat room actually. And oh well, are those numbers maybe distorted? Is that foreboding a very negative number next month? Maybe, but in the meantime, as we've already said a few times here as well, I mean, whatever the numbers may be massaged or whatever, it goes into the pot, and models will be taking that at face value right now, and the number is still there. So I think all in all, that keeps the positivity for the sterling perhaps as well. The jobs report, yeah, bit I don't know, in the middle of the road. I didn't see anything overly bad in that, or saying like, oh, okay, now something is really going really bad in the UK. So that's no. I mean, moving on from that one. For the rest, no. And we've heard a lot speakers and stuff. I didn't see anything really earth-shattering or changing any trends or whatever in whatever data came out, or even those central bank speakers. No, moving on.
Yeah. We do get the monthly GDP report for the UK a bit later in the week, Thursday, I think. So again, the data, some of the data has been coming up a bit positive. Retail sales have been pretty positive for the year so far. So we'll see if that continues as per that number. But that GDP number, a bit of a surprising Q1 data. But yeah, we could see that continuing. As you say, the pound might be a bit more supportive on the back of those numbers. Fed Kugler says that the US-China tariff reduction is an improvement as far as trade between countries go, but they're still pretty high. Still sees an increase in prices and a slowdown in the economy, but not to the same rate as before. Banks are continuing to slash their Fed rate cut forecasts. Goldies now only expect one rate cut for the rest of the year from the Fed. And they see that coming in December instead of July. I think they were predicting 3 rate cuts prior to that call, so a big cut by them. Citi also now pushed their first or next cut out to July versus June. So, as we pointed out yesterday, a lot of the market getting very undovish over the Fed, and I'm wondering if they're making a bit of a mistake. It won't be the first time, but we shall see. Treasury Secretary Besant was asked if he will meet with China again. Says he imagines we will meet again in the next few weeks, but nothing concrete as far as the next time they meet. He says that he imagines the next meeting will be on a more fulsome agreement. He wasn't talking overly nicely, shall we say, following the weekend stuff, saying the current tariff level for China is a floor. The April 2nd level could be or would be a ceiling. Says it's implausible tariffs on China go below 10%. We can always go back to the April 2nd level for China tariffs. He also hopes that most trade and tariff deals are settled by year end. Trump, he's set his focus now on the pharma sector. We knew that was coming. He says he will no longer tolerate profiteering from big pharma. And he also was digging out Europe quite strongly. He says Europe has been brutal on drug prices and was the most difficult on drug subsidies. He says the EU is nastier than China. It says the EU will come down a lot and they will have to pay more for healthcare. So that's not going to do the euro any favours if he's got them in his target sights. So on China, tariffs will go up without a deal, but won't go all the way back to 145%. Trump's gone over for his little shindig in Saudi, going on a little bit of a world tour. He's taken all his bods with him, Besant and the likes. Also going to be having a lunch with all the royal family and whatnot. That includes Musk, Altman, and Huang from Nvidia. So that might yield tons of headlines a little later on. So, and he's asking, what will it do to oil prices? Who knows? If they get some deals done, I don't know. US is a big oil producer, as is Saudi. So it's going to be a case of how they talk about that one. I don't know what it does for oil. Oil at the moment still largely reflecting this better risk mood between China and the US at the moment. Kay, on this, we're going to get now every day. We're going to get what Trump's talking about with China, but as Besant showed yesterday, they're also still willing to talk on the bad side as well as the good side, like what would happen if there's no deals and how bad it will get.
Yeah, and the funny thing is that China didn't miss the occasion to reply today saying that fentanyl is the US's problem. And that US is not really playing fair or not coming over the bridge too much. So it's not a done deal, right? It is still not a done deal, although there's of course positives. Everybody will say or will claim the victory. Trump especially. It's not completely done. And this thing, of course, it's a big problem, but in the big scheme of trade, it's probably not representing percentage-wise that much. But this fentanyl thing is used now as a clear weapon on both ends, both sides, to perhaps make a deal or fail or even have it fail. So yeah, we're not back to square one because the positive is there. Tariffs have been scaled back, but we are far from done yet. And then what Annie was asking about oil. There's probably going to be a lot of cheering going on in the Middle East from both sides. Big investments from the Saudis into the US. US perhaps going to, although for the consumer they want lower energy prices, but US probably going to ask the Middle Eastern folks not to weigh too heavily on those oil prices because we have seen that they are hiking their output, they are giving discounts and stuff like that. But we have to know that the US can't pump under a certain level, so they are going to need a certain level. So there could be something coming out which at first may be perhaps a bit bullish on the oils, but then the second round effect, we have seen oil trying to rally so often of late and always running into trouble after a couple of sessions of higher prices. But for this one, I would be a little cautious for while Trump and all his buds are in the sandbox. So yeah, it could be that we are seeing a bit of a rally there continuing. That is just a thought. I'm not having any positions in it, but yeah, just looking at the oil producers in the US can't produce when prices really are at 40 bucks or so. They need a bit higher prices, especially uh, because their costs are higher. And if they want to export, they need decent prices as well. So that is somewhere my thinking about this right now.
Yeah, and oil might be the least of discussions considering who he's got over there for meetings, all the tech bods going over there to meet, the royal family. So tech is a big growing thing between the US and Saudi Arabia. So that might get more headlines than the oil markets.
They have a lot of room as well in the deserts to put all those tech warehouses and stuff where they need to put their big chip factories and stuff and electricity.
Yeah, exactly that. And something just to keep an eye on for later in the year. On the face of it, big news. McDonald's, Mackie D's, apparently announced plans to hire 375,000 US workers this summer. How they do that remains to be seen, but it's just something to keep in mind for the NFPs over that period. Or it could be 374,999 if Trump's still on the payroll after his stint there the other last year. So keep an eye on that one for the jobs market. And that's all I've decided to pick up from on the headlines. Kay, anything else?
No, I think we've covered most of it.
Good stuff. Just what I like to hear. Right, so today, at the moment, it's looking like a day where we wonder what's going to happen next. We've obviously had some big moves. When you see big moves, first question you've got to ask is, can we maintain those moves? Can they continue? Are they going to reverse? What's going to happen? Right now, it looks like we're just in a little period of what next? Euro dollar, the case in point. We've been turning around this 111. We've been below, we've been above, we've been below, we've been above. We're just trying to hold it at the moment, but bounces thus far are looking pretty weak. In the first move down, we only managed to bounce to the 30s. After this second move down, we've only managed to bounce to the 20s. So it's not looking like we're ready to start taking back a lot of this loss that we've seen in the move through 112. Whether we've finished making bottoms or not is another question. But this is a case where, I don't know, we may be getting in a situation where we need something more to continue going. As I say, Trump targeting the EU for the pharma side of things maybe keeps us on the soft side. Just today, just zooming in, we are holding the 111 for now. So you can probably use this level as a bit of a pivot point. Keep an eye on these prior highs to see what happens up here, 20s, 30s. Ultimately, though, this 111.50 is going to be a gauge for whether we're going to start clawing back a lot of what we saw yesterday. If we can't, or if we get up there and tap it and can't get through, then I think that's going to keep the pressure on the downside. Couldn't quite get a look down at that fib level down there, which would have been interesting to see. I was keeping a beady eye on that one. Maybe we get that if we can't rally too far. But for me, I don't know which way this one goes from here.
Yes.
I'll be interested to see if we do get a rally to 112, how that performs, considering that was a level I was watching. Yes, mate.
Yeah, there's a lot of chatter in the mid 110 and a half. There's a trend line coming in from very, very long term, which when it broke really set the euro dollar on fire up to 115. It's a really long term. It's I think you have to zoom out at least to the weekly, because let me just have a quick look. It comes back from is it not 2000 whatever?
One of these ones.
2008, yeah. The 2008 trend line is coming in around there. Depending on the pencil, it's anywhere between 110.40 and 111. So no wonder that we are stopping here and having a thought about what the next move is. We have US CPI today, Ryan, which could set a few things in motion. And again, I'm wondering, because there is so much going on trade and things. I'm wondering, unless obviously we are coming out far from expectations, that it really will have a big impact on markets right now. But it could have, especially if it comes out much higher or much lower than expected. Much lower will surely have our good friend Trump sending a few scuds Powell's direction. But Yeah, it could be just that thing that the market is waiting for, as you say, to give us the confirmation whether this move is going to continue that we have seen over the past sessions or whether it was enough.
Yeah. And I was having this conversation with a good mate, Michael Brown, on the trade-off
Mm,
yesterday, because CPI 2.4%, fine. This was a number I've been banging on about for probably the last year or so, because it's been sailing above 3% for pretty much 4 years. Okay, probably 4 years to the month, I think, or to April, and we've only just got below it last month. And this is now the potential for the downtrend in inflation to continue. So if we get a soft one today, we're expecting both the measures to come in unchanged. If CPI comes in closer to 2%, if the core comes in 2.6, 2.5, something like that, that's going to give the Fed the ammo to look to cut rates. And
mm.
that's going to happen all while everyone's expecting them to do less cuts and do them further out. Now, timing is everything. We may still see some inflationary blips from the tariffs that have gone in and whatever, but the Fed are going to be looking at the trend, and if the trend is down, they are going to be looking to cut rates. So I think we may have an opportunity or potential where the market is going to get too undovish over what the Fed does,
Mm.
and this is the data that could swing it, as far as I'm concerned. What are your thoughts on that?
Fully agree, as I've been saying yesterday as well. So I had a bit of a chuckle today when Goldman Sachs came out with that rate push back until December. Nobody knows for one. To this month should, in theory, with all the front running and everything, and if you take into account the tariffs, should in theory be a month where CPI should come in a little bit hot, get a weak one here. All those guys who are pushing back those rate cut expectations can go back to the drawing board and write another paper to bring it back closer.
Yeah,
Yeah, I mean, it's in that sense, it's going to be interesting. Now, I still think that inflation is one thing, and then you look at the other side of the mandate, which to me somewhere is still more important. But of course, Trump brought inflation back to the fore as well. So yes, it could be an interesting one, and I would in fact indeed say that if it comes in higher, we may have that blip higher in dollar, but I'm not sure it's going to be lasting because everybody will know and that it is a case of those tariffs and they have been brought back down this weekend. But if it comes in weak, then we may have seen a bit of a top in the dollar there, yeah, I think.
yeah, that's absolutely possible. And even though I'm long some bucks at the moment, I'm going to be considering that one. I don't know what I would like. I don't know if I'd like a soft one to sort of confirm what I'm saying, or a
Mm.
hot one to maybe think about getting on some shorts for if it does turn. But yeah, it's going to be interesting, that data anyway. And I'm seeing people in on Twitter and wherever, saying that if the tariff situation is removed or it eases, that's going to rule out a recession for the US, and that justifies the Fed being able to take their time to cut rates. But not having a recession doesn't mean your economy won't weaken, and that's
Mhm.
something that we need to keep an eye on. So it's never as straightforward as some people make out. But anyway, CPI data going to be a hot one later on, or could be a hot one later on. Right, so we don't know where euro dollar's going. It's coming a bit. Let's have a look. Let's see if we can tell where dollar yen's going. Still don't know where that one's going either. We've had a level show up, this 147.65 ish, when we had this move up and we had the first pullback. That's where it decided it wanted to stop. We've messed around and it's come back there overnight or this morning, and it stopped there again. 148 is looking like it's trying to resist at the moment. So again, we're going to need something to maybe get us going back higher. We're not going to collapse, I don't think, unless there's some big news. But if the market, anyone who's been buying it up here rather than down here, is going to be wanting this to push on, or they're going to probably get it a little bit antsy, and then we'll get some more short-termers bailing out, and that's when you get a steeper pullback. For me, though, it's becoming a possibility where, again, we've got some small levels, this 20 level, these levels up here around the 40s, 50s, these highs. For me, it's whatever we do between this 148, 80s and 147. That's the bigger playground that I'm going to keep an eye on, because that's the bigger levels in play. This 148, 80s up to that fib or that 50 retracement is a big old zone. We've messed around there plenty of times before. So if it's going to kick on, that's the level it's going to break. It's also going to be a big test for the year's trend. Okay, if we hold there, it keeps this looking still very bearish, despite how far we've come in a short space of time from these lows to here right now. This is some big old ranges we're trading in. And one thing I want to point out, I'll make bubbles in the room. Just looking at the wider price action, we are in effect looking like a big old consolidation period going on here. Very wide range, so plenty of room to play in with this one. But yeah, you know, could call this a bit of a triple bottom here, give or take, but it's looking like we're ranging quite widely on this one. So bear that in mind as well. Kay, you got any thoughts on this one today?
No, I'm you know, I was with you for quite a bit on this dollar yen. I've flipped back into sterling yen just because of the US CPI today.
Yeah.
We're turning around the bottom of that daily cloud, but seems like to get watered down relatively quickly. But really, okay, you got US CPI today, and then we've spoken about that on the top of the show. You've mentioned as well, Kato, in the upcoming days, talking perhaps about FX with Besant. Regardless whether they say something or nothing, it will have an impact on the yen. And then we have to see where we can get to. I think if really nothing is said, I wouldn't be surprised if this thing trades 150 pretty soon. But will it be specifically dollar yen depending on the dollar, of course. But I'm still looking at those yen crosses as well. They are still bid. If nothing is said, those can push through and then take your dollar yen higher as well.
Yeah, that guppy is right on a big one, isn't it?
Sorry?
That guppy is right on a big one.
Yeah, the prior high, mate. We're really there. If that goes, we could be trading 197 pretty quickly, and who knows? The big triangle has broken somewhere around 193.80, 194, and since we've broken above it, we haven't really looked back. So this is still pretty positive. Obviously, we never know with the yen, but that's what stop losses are for. But yeah, it is looking positive.
Yeah, very much so. As always, I'm keeping an eye on dollar China. That didn't really do much in yesterday, which was a bit of surprising. Yeah, it did come off a bit, but I didn't feel like it came off compared to what others did on that one, i.e. the one strengthening. Could have been a mix of both sides, dollar and China, but we're seeing a little bit of weakness at the moment. May get a test down to one of the areas I'm looking at, 16, 17. I'm less inclined to try a counter trade with all this good news at the moment going on, because there could, further good news and positive comments. We could see this one coming down a bit further, but I might be interested if we get a sort of speedy move down to this area here. It's really weird at the moment, mate, because things happen so quickly right at the moment. You get a headline from Trump or something out of Trump and we're going the other way. I like my longer term trades to be nice and easy and calm and easily set out, but I would like to be short in dollars because I think the Fed are going to still cut, but I can't do that right now because every 5 minutes you get a headline and you flipped around 100 pips, 150 pips, and you can't really get into that. But are we going to get back to sort of trending markets, or are we getting too sucked into the short term noise instead of looking at the bigger pictures like on something like this?
Yeah, I think we have a big problem now, Ryan, to stick longer term stuff on there because and it's not something we wouldn't love to do. We love to put on longer term stuff, and there are big moves. But look at what the equity market has done. Look at what the bond market has done. Who are we in FX to negate or to ignore those moves? We have seen a 20% decline in the S&P. We've seen the 20% back up. We've seen a bond market collapse. Then it rallied like hell, and now we are like here and coming down a little bit again. I mean, it's just the market is just uncertain right now, and for as long as this uncertainty lasts, we are going to be trading stuff like that, and we are really having issues with finding very longer term stuff, unless you got really deep pockets. If you think that sooner or later this whole thing, the Trump is right or wrong, you can put very long term dollar positions on. If you think Bank of Japan is not going to raise above 1%, and they are not going to do anything about the yen, you can put in longer term shorts yen still, but you need very deep pockets to keep the position. So you either trade intraday or you trade a theme for a few sessions, and then we need to reassess.
Yeah, until the next headline changes the narrative. Exactly that, mate. Right, I'm going to kick it over so you can have a butchers at a few things. All yours, mate.
Okay, well, let's go first to what our friend Ali is looking at. Euro sterling. Ali, yes, I'm still there. It is still, here we go. It's still on its slow slide lower. I do think that we have broken a pretty decent zone here. Whether you were looking at this one around 84.75, or you were looking at this, really, this is the old channel trend line. We've broken out of it. Now we're back in there. We've broken support on here trend lines. We have really there was a wedge here that we're broken below. So this 84.5 really has been a pretty decent break. Add a bit here at 84.30, which was the 61.8. So we are still on the slow slide lower euro sterling. I'm still in it. I do trade stuff around, adding, taking back, and then but I have a from around here-ish somewhere. I have a base short running, and then just adding and chipping away and taking pips here and there. It looks as if, for as long as nothing changes on, for instance, the Europe-US relationship, if all of a sudden they find an agreement which is pretty decent for Europe, this is going to rally again. But for as long as we have this slightly better stuff going on the UK side than EU, really, the sterling is doing well. I mean, it's doing well, as we saw, versus the yen. It's doing well on virtually all crosses. So this one, no exception. I think you look at three levels here right now, really in the short term, 84.30. Then you have your 84.5, and then this zone here up at 84.75. If that would start to go, then I think we could be in for a reversal. But for as long as that doesn't happen, why change a winning team? I want to again come back on this silver. We dropped here on Monday yesterday in sympathy with what was happening in gold. But you know what I told you already a number of times, that when things go a bit better, silver should outperform gold, and it's kind of looking that it wants to start doing it again. So we've broken above this trend line now, but recall this level that I've been talking about when the trend line was at 33 and a quarter. I really want to see a confirmation above 33 and a quarter to tell me this is going to continue to push in silver. And right now we stopped dead there and starting to come back down a bit. So this is really your top side level here that you need to look at. If that doesn't break, then we're probably going to mooch around for longer and trade whatever headline comes out on positive, negative side of things. Gold doesn't tell me much. It did hold low 32s again. For those who want to play the long side, still very positive, yes, but I'm going to need something fresh now to tell me where I can take my next position. In the meantime, I think we're going to range a bit here, potentially between 32.90-ish and that low 32 for now. And then in the meantime, yeah, you can trade the inside or the day-to-day ranges. This oil, we were talking about it, right? And look, we've had this big drop, and if you look at since the war in Ukraine started, all the highs have been lower. But right now we are trying to find a direction. It is a big range, okay? It is a big range. It's 55, 65, basically. But we're still in the same scenario. You have those blips higher, comes back down. Then you have a really nice blip high, it comes back down. Here is the positivity on what's happening between US and China, and we're still stopping in this zone. So 63, 60, high 64s is really, really key, in my opinion, for what's happening next. Right now, we can't break above, and we can't for sure hold it, okay? I think it can push towards there again. Now, while Trump is in the Middle East with all of his suit, and there will be deals made, whether it is between Huang and Musk and who else, and Besant and stuff on trade deals with the Saudis. Saudis will probably invest money in the US and things. There could be positive signs here as well. But look where we end up once we are out of this whole Middle East episode now again. And this is again why we were just talking about it a few minutes ago. Yeah, it was extremely negative, and then we had some positive signs which didn't last. But now we have like the next episode to look at. So it's still difficult to have like very long term unless you're short from up there, and then you're watching this zone probably or even a bit higher around, yeah, just above 65 to form an opinion when you're short. But there's a lot of uncertainty in this oil now as well. Now, pop, 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 pop. What else do we look at today? Oh yeah, the S&P. S&P came up to that 78.6 at 58.55. This is a zone that I'm going to keep an eye on. Look what's happening over the US CPI. It's going to have an impact on potential impact on yields. It's going to have an impact on equity markets as well. If it breaks above 58, 55 and hold the S&P, we may be up to 6K again. Market is already talking about fresh highs. One step at a time, I would say, because it's not really done yet. Now, this as well may have a push in its back to go and have a look higher, depending on the kind of deals that the Americans will strike in in the Middle East, right? So it could also have a bit of a positive impact there. Of course, if the Saudis say something that is not going to be for the likings of Trump, which is unlikely, let's face it, we could get back down to 56s perhaps to rethink a bit. But we are on a bit of a level here in the S&P. Okay, so this is an interesting one to watch as well. Aussie made a decent comeback, Mike. we did get down to this prior low here around 63.55. There's another one waiting here. I thought breaking back down below this trend line could have seen us trade a little bit lower, but it held that prior low, and it's actually, if you look at it, it's relatively positive on this picture. I'm not saying that we are going to straight away break above 64.30.40 again. That'll depend on this afternoon number. But get a little bit of a weaker CPI. I wouldn't even be surprised. We are maybe going for a bit of a walk higher. I'm going to keep a close eye on this one. Also, the Kiwi did pretty much the same move. We are back around 59, which is probably the pivot of the day, the hinge around which this market is going to trade. We also went down to that prior high and stopped there. And the bigger zone here, the fib zone, was even left untested. So we could argue that we are still in this perhaps a bull flag or bull megaphone or whatever. I leave that to the tech specialist, or bullish wedge or something that could resume in a bit of a move higher on the Kiwi as well, providing that we don't get an overly sticky CPI coming out later on today. Just looking at the clock, I think you covered the euro dollar, huh?
Yeah.
Okay, just a quick one on the cable then. Cable, I think it's holding. We had this top run that we saw, but we held quite above important bids here. To me, this is an important zone here. 131 and a quarter up to 131 and a half. This 131 a quarter and a half, I think is interesting enough to keep a close eye on. We're back above 132. Looking positive, and bearing in mind how the sterling is trading now on the crosses as well. Also here, I think a slightly negative or weaker CPI could drag it back up. Why not closer to 133? But pay attention, if 131 and a quarter goes, we may be in for a deeper retracement. Okay, down to 130 or so. It's up in the air, but right now, in line with what we see in other certain currencies, it is holding pretty well still, I would say. And with that, Ryan, back over to you, mate.
Thank you very much, mate. And yeah, I want to say well done on Euro Sterling. I've been off that wagon a bit of late, and you've been right in the zone with that one. So nicely done with that lot, mate.
Well, that's probably the one where we could be patient because of the divergence I've been talking in sentiment mainly between what's happening in Europe and the UK. And it's the little things that, well, of course the trade is big now, but I mean it's also the on the other side, the reaction between Trump and EU. He wants to put max pressure now on the EU as well. So yeah, it's all those little things and they just keep me in the trade because nothing is changing right now. This is going to be an interesting one, if ever, as something really materially changes there, because then we are going to have to look at the other side, of course, knowing that any negative news, the sterling is a pretty emotional market, and sterling can move pretty quickly.
Yeah, absolutely, mate. Absolutely. Right, on that note, thank you very much, and thank you everyone for coming to the Flow Show, supporting us here and giving us your eyeballs. Keep them coming, and don't forget to check out our offer. We will see you all tomorrow. Well, I won't see you tomorrow because I've got an appointment, but I'll leave you in Kay's capable hands, and I will see you on Thursday.